Hey guys, it's Pete. Who else, right? Anyway, finally gonna get a little bit of a webinar out to you. Not gonna be in technicals. It's not gonna be on emotions. It's just over the years I've read pretty much everything there is to read, and there's some good tidbits. So I called this thing little tidbits, little pieces here and there that I want to stress to you guys. These are very important. I probably never touched on them, but it just kind of reaffirms everything that I try to teach you guys in the room about the markets and the right way and the wrong way to do something. But before I do that, Luigi is going up to Canada to liquidate his account with the prop firm. So he's been gone for a couple of weeks. But I am proud as hell to say, which I do not want this on Twitter or anywhere yet, because it's a major thing, and I'm proud it happened here, and I'm proud that I was able to help him achieve his goal, even though now he has a new goal. But it's something that I will make public knowledge when I feel ready. So I will leave it at that. But Luigi is the first millionaire now that I have trained. That's what he called me today. Tell me, and I couldn't be happy for the guy, man. He started with a lot more money, and he had a huge account with the prop firm. But props to him, man. Telling you, man, it makes me feel great. I can't imagine how he feels, how his family feels, and not a doubt in my mind with Luigi. I know that he's gonna have his account statements and everything else when we're ready. Nick, I'm doing my webinar. What's up? Okay, thank you. So anyway, congrats, man. It feels great. So it can be done, guys. Okay, it can be done. And when he called and told me that today, man, I was like, holy crap, man, that is probably the best news I've heard in a long time. So my part of paying it forward is done for Luigi. But him and I are going to rock anyway going forward. So it just feels good, because that's really what I wanted to do to begin with, is just, show people the right way to do it, and they just don't take the time, or they just want the shortcuts. And you know what? The hell with that. There are no shortcuts. I tell you that all the time. And now I can proudly say we have a first millionaire trader in Iconic. And I appreciate it, Luigi. Thanks for the props. But I took the calls, man, and you took the trades. So you're the one that made it happen. You just implemented the knowledge that I teach. And hopefully you guys one day will get there as well. So that being said, I'm excited. I don't sound like I'm a little spent right now, but I'm really, really excited for you, Luigi, and I can't wait to have you back. And there's just nothing but good things ahead, man. Nothing. So that being said, there's some things in here that I'm going to try and read to you. This is from a book that I actually love this book. It's called Techniques of Tape Reading. There's a lot of good information in this book. It's how to read the tape in any market, separate market reality from market misperception, and learn what price volume action reveals. All three of these alone are very, very important. Okay? But the pages that I have folded down, I folded down when I read this. This is funny because I was just like going through all my stuff, and I folded down so many pages, and I actually get to use it now to teach it, because it was important to me. The bad thing is, well, not the bad thing, there's so many different illustrations and charts in this book that I might say, hey guys, go out and get this book, just because the illustrations alone are worth the $50. I mean, let's see when this book is from. You could probably get it on on Amazon or eBay or something, used. When is this book from? Can't be that old. Yeah, I know. I'm taking up your time. I'm sorry. I just want to see how old this book is. I'm curious now. Come on now. It's not that old. It's from 2004. But anyway, it's a great book. I suggest you go pick it up. So the first thing I'm going to read, and these are from all different chapters, just little paragraphs here and there, is about learning from experience. So I realized that all those things I was looking at and using as reasons for my trading decisions were completely irrelevant. News didn't govern price movement. Fundamentals did not either. They're using the stock KTEL back in the day. KTEL was going up and up because the majority of people trading it did not believe it would. The majority were taking short positions, and the market acted in a way that would hurt the majority. The public was thinking and rationalizing and analyzing, and the public was wrong. But wait, was it really wrong? The KTEL price depreciated greatly after the short squeeze was over, and eventually KTEL shares were delisted from the NASDAQ. So was the public right? Actually, yes, it was. Did being right help the public make money? No, it lost. So here's the answer. People were looking at something irrelevant to the stock price movement in this particular time frame. It didn't matter whether or not they were right, because it was about something other than price direction. Even if they were right, it was not what impacted the stock price. Supply and demand did. People were trying to judge the supply and demand from the evaluation of news and fundamentals. But the real ratio of buyers to sellers was governed by different factors. Those factors had to do with the smart money playing against the crowd. I'm going to repeat that. The smart money playing against the crowd. That's how traders make their money. The stock market apparently worked in a way that would allow the minority to take the money from the majority. Very important. It's not a conspiracy. It's not manipulation, even though we know it exists. It's just the way the stock market works. I need to do things differently from what the crowd does, because crowds are not successful in any kind of business. Those who reach the top are those who have unique vision and the ability to realize that vision. So when you see the crowd going for something, you want to view the situation from a contrarian's perspective. Again, man, golden. Those who reach the top are those who have a unique vision and the ability to realize that vision. So when you see the crowd going for something, you want to view the situation from a contrarian's perspective. Okay? It's perfectly said. Okay? And that's why very few traders succeed in this business. Okay? We need to short into strength, and we need to sell at the right time. Okay? Or if we want to long, we long it on weakness and we sell it into strength. We do the exact opposite of what the general public and the retail investors and the market makers and everybody else wants us to perceive from the charts. That's why we have so many fake breakouts, especially on the double and triple tops. You know, you have fake breakouts. You know, they'll take it 20 cents, 30 cents higher. I say this all the time. And then they'll get the rookie traders trapped in the long, and then what happens? They take it down. So that sentence is very important. Those who reach the top are those who have a unique vision and the ability to realize that vision. So when you see the crowd going for something, you want to view the situation from a contrarian's perspective. Okay? You need to change the way you're looking at the charts and do the opposite. That's what hit me. Okay, when I came up with this, that's what hit me. Okay, and over the years, the Kaplan method, iconic method, whatever you want to call it, okay, it's been tweaked, it's been tested, and that's all it is, guys. You know, it's really not hard. Okay, is it scary to short into a big green candle? Hell yeah. Is it scary to be, you know, a point, 50 cents underwater before the trade starts working? Yes. But you have to do that. My job is to make you do it and feel comfortable doing it. Okay? So that was like this whole 1, 2, you know, 3, 4 paragraphs were just great for me. I'm going on. After this realization, the pieces of the puzzle were coming together for me. And my motto, trade what you see, not what you think, was again validated. We can think anything we choose because of the news, a company, of fundamentals, or financials. But the price action is the ultimate truth. For traders to make money, they have to read the price action. Not all those things that surround market movements. You can't analyze shit too much, guys. You can't. Okay? And hopefully I'll remember to get back to this. I want to talk about the open today. By being around other traders of various experience levels, you can see endless variations of those things. Traders all of a sudden become expert in drilling results, medical research, software details, surgical tools, drugs, electronic devices, and business models. You name it, and they discuss it and argue points. They try to take something from the information that will help them predict price movement. But look at stocks going from 10 to over 100 and back down during 1999 and 2000. Did the fundamentals of the companies, business models, or their shares in market change that drastically in both directions during 1 year? Maybe in some small cases, but I doubt it was the reason for all those movements of such magnitude. Here's another example of how our thoughts can take us to a dead end. If the FDA approves some new drug presented by a company, stock price rises by, let's say, 2 points. Then the price retreats 1 point. Did the FDA withdraw its decision, thereby making the stock drop? Of course not. It was the balance of supply and demand. And that's what we take advantage on the paras and the falling knives. Like after hours, this Alex, you know, has a major depressive drug, you know, got approved, phase 3, huge stock. I'm looking at it now, it went from $40.95 up to $63. Actually, went to 66 before it had its first pullback. I was going to short it at 55. Thank God I didn't. You know, supply and demand. Did the FDA withdraw its decision by making the stock drop? Of course not. It was supply and demand that impacted the movement and changed the price levels. While the initial press release served only as a trigger for the trader's interest. Hence, in order to trade these movements correctly, you need to read the balance of supply and demand. Okay, I got one more paragraph and then I'll explain that. Remember the Briac story. You don't know that story because you didn't read it in the book. Traders were mistaken in their evaluation and they lost. In the case of KTEL, traders were right and yet they lost again. Isn't this proof that traders were basing their decisions on totally irrelevant things? They were creating some other reality than the reality of stock movement. Okay? That's all there is. Price action, stock movement. And that's where the candlesticks come in. I mean, on this IMAX today, was it IMAX? I don't know. A doji came up, and the thing was popping. Then I saw a red doji. I took a short automatically. Why? Gapped up huge. Okay, there's no way it's going to sustain this move. Got the red doji right by the upper deviation. I go short. It's just like, that's what you do, because you know the move's coming. A red doji or a green doji are a sign of change of direction. And if you get one of those right at the upper or lower deviation band, you got to take it. You got to take it. Okay? Nothing else matters, guys. Nothing else matters except for stock movement, price action, and candlesticks and volume. Okay? That's it. Everything else, you can't really be specific on as far as your stops and everything else. You know, what one person may tolerate, another person may not be able to tolerate. But I will tell you this. If you're trading more expensive stock, you need to give it more room. Okay? You can't get stopped out in 10, 20, 30 cents because you're going to miss the move. Okay? In addition to that, once you're in the money, you got to protect your profits and never let a stock go against you. Ever. Because what we do is probably the hardest thing for a career that we can ever choose. Because we are up against the best of the best. You guys know that. So if you're in the money, don't ever let the market take it back from you. Ever. Put your trailing stop in. Okay? So, let's see where I left out. They were creating some other reality than the reality of stock movement. That's really all that matters, guys. Is price action and stock movement. You know, and the candlesticks tell you everything. You know, and that's why we take advantage of the emotions. So I'm going to touch on today with the open. You know, so many people want to learn how to trade the open. Okay, and you know, in an ideal world, you know, maybe a year or two from now, whatever. I mean, depending how things go, I might just come in for a couple hours and just trade the open. Hopefully by then, we'll have some moderators that are as qualified as Luigi and I, to help out run the room. But usually 9 times out of 10, after the open is done, I'm pretty much done trading for the day, especially after a day like today. And one of the traders, made a comment today. Trading the open is quick, okay, but there is no analysis. Okay, there's no technicals. There is technicals, but they don't really matter. For the first 10 minutes of the day, when you got a gap up or a gap down, it's pure emotion. It's emotional trading. Okay, so you can't go to the 1 minute, can't go to the 5 minute, can't go to the 2 minute. You just have to play what you see. Okay, and what you have learned through the webinars. Okay, if a stock's gapping up $3 on some BS news, okay, I say, guys, this thing is probably going to fade, and you start seeing some green wicks at the top and then the first red candle and some volume, you short the shit. Or as Chicago says, hey, 9's crossing 20, short the bitch. That's what we do. I can't explain trading the open except it's trading emotions from other people. Okay? That's all it is. It's an art, absolutely. But you can't analyze anything else. You can't. You don't have time. So the stocks that gap, they gap up and they usually fade. And if they don't, you take the trade off. On to the next. There were so many gap and fades today. It was ridiculous. Ridiculous. And we missed the easiest one with that HLX. I think paid both ways. It would have been 4 points, $4,000 in 30 minutes. Day's over. So if you want to learn how to trade the open, okay, throw everything out the window as far as different time frames, everything else. Stick to the 2 minute, okay, and just either follow me, follow Luigi, or don't trade if you're not comfortable. Because you can't analyze the technicals that much during the open. You don't have time. The money's made too quick. You just act on instinct because you know what a stock should do based on its prior history. Okay? So I'll touch more on that when I feel I need to. So this is the stop loss stuff. I don't think I need to talk about stop loss. So let's see what we got next. All right. This is kind of a little longy, but it's good. It's chapter 4. Learning to trade for a living. So let's take a in-depth look at learning to trade. This topic is the subject of a completely separate chapter for 2 reasons. First, somehow many beginners feel that they can jump in and start making money. Some think they can learn trading in 2 to 3 months. I've known maybe 2 people in my life that have learned it that quickly. Can you imagine any serious profession that can be learned in such an amount of time? Trading is certainly not the easiest of the professions. In fact, it is the opposite. I have heard many people say this is the toughest endeavor they have ever undertaken. I've said that many, many times, guys. The second reason is that before you start learning, you must know what you must learn. And I can't tell you how many traders want to come to my room that don't give a shit about learning how to trade properly and what you need to learn, and take my method and then kind of tweak it with their method. They're done. They're out of my room. Simple as that. Okay? If they want to be in my room, okay, our room, but they want to take the method and use it with their method that apparently is not working, it doesn't work. You know, because apparently what they're doing right now is not working for them. That's why they want to come here. So, for many traders think that in order to trade successfully, they need to learn about indicators. They believe that only have to find the one that works or some magic combination of them. Then they think they have the key to the bank, and that is a big mistake. This approach leads beginning traders to believe that there are secrets known to the top traders, and if they can only get a hold of these secrets, they can make money easily. I am confident there are no magic bullets, no great secrets hidden from trading masses. So in this chapter, I discuss different aspects of the process of learning. And this is really what pisses me off about all the gurus out there in the fake rooms. You know, they're like selling you a fake dream, man. Like, yeah, I got a secret for you. You know, this is how you got to make money. Come join my room. You know, and they don't give a shit about you. They just want their monthly subscription fee. You know, that's all they care about. And I'm telling you, there is no secret, guys. There is no secret. It's screen time, and it's a combination of, like I said, supply and demand, and knowing what stocks should do when the probabilities are in your favor. I always find it interesting when some traders talk about their huge gains or profits, but never about their losses. On the other hand, some traders like to tell horror stories. After all, what doesn't kill you makes you stronger. This is an interesting dichotomy, as trading is about profits and losses, not just profits. It's easy to spot the worst traders in any crowd. They are the ones who only talk about the profits. Successful traders don't have to prove anything to anyone, and they are 100% responsible for their own trading. They know that successful trade is the one worked as planned, which means the knowledge needed for the trade was actually already acquired. It is the losing trade that carries the lesson to be learned. No matter which method you follow for learning, the market will always be your main teacher, and its lessons are served in the form of losses. Very true. I have met quite a few traders who have never even tried to learn. Thought they can use some stock picking service or newsletters and trade their picks without deep understanding. And man, there's nothing more that aggravates me. You know, I get, whatever. No, you know what? Not whatever. I'm gonna go on a little rant. I get a few people, here and there come in the room, and watch the webinars. Never watch a webinar. Want to know what the picks are. But they don't even ever watch the webinars. They have no no intention of learning. They just want the calls. So again, see you later. That's why the room's small, you know? And I don't care. I really don't, because I value all you guys that are here. If it's 1, if it's 50, it doesn't matter to me, because I'm doing what I love, okay? And hopefully I'm helping traders get a little bit better. And hearing that news from Luigi today just kind of, got me feeling pretty good. So pure followers of stock pickers will never be around for long. Traders have to be their own leaders in order to survive. Furthermore, stock pickers rarely tell you how they pick stocks. They'd rather you just pay for their insight. Let's face it, followers don't trade for a living. Followers exist for a while as they continue in their learning phase, but they have to emerge as leaders for themselves if they are traders that are worth their salt. The only kind of stock picking service I would recognize as a valid one would be where the leader explains the reasonings for the play so the traders can follow it. Check if they are comfortable with it, make sure the risk is acceptable, and so on. In this case, it's not about following anymore. It's a normal process of learning in which a teacher shares knowledge and experience. And I hope that that sums up what I do for you guys, with the exception of the open, because there is no explanation of the open. Okay, it's just experience. Among the traders I have communicated with are a few who went through the process of learning along with me. Problems they encountered are quite typical and instructive. For example, one particular trader, a woman from Russia, was easily one of the most intelligent people I've ever come across. As intelligent as she was, she still experienced many of the same problems as I did when I was learning to trade. She took a bit of a different route, however. She started with a trading outfit that taught traders. She spent many months with this outfit to no avail. Much of her account was depleted, the same as mine. For all I know, the system offered could be sound, but the method of teaching was missing much of what trading is really about. No system offers profits to everyone. Some systems don't offer profits to anyone. This is another interesting aspect of selling in America. If I can't make money using it, I can make money selling it. Fortunately, I learned to trade without having to pay for something from someone that wasn't proven reliable. I paid the market for my education instead, and what a great teacher it was. It's true, the market is your teacher. I'm your guide, but the market is your teacher. And unfortunately, there is tuition. Everyone knows this with the exception of the newer traders. I blew through 80 grand in a heartbeat back in late 80s. I was listening to everybody telling me what the hell to do, and they didn't know shit. And I was a rookie. I was, taken in, and I said, enough of this, man. I'm going to figure this out on my own. That's exactly what I did. So, you guys are starting out trading 10, 20 shares. It's awesome. It's perfect. Okay. A bad day should be, you red 30, 40 bucks until you get this down. Okay. And then once you get it down, you're consistently green. Then you start trading with size. Then you start making a couple $100 a day. Then you say, you know what? I'm consistently making a couple $100 a day. You increase your share size. Then at $200 a day becomes $400 a day. Okay. And it's a gradual thing. Over the time that you're sitting and scanning, you have to watch the price movement. You have to look for patterns, and you have to see how certain stocks react. That's screen time. That's going to develop your intuition for the market. Okay, it's screen time. Okay, I don't know what stock it was today. I don't even know what it was. And my light speed's not open. But anyway, I came back from lunch today, and I saw that para. I took a nice short. Oh, it was NXP. I don't know where the hell. I think it was NXPI. But it was just instinctive. It was too big of a spike. It had to come down, which it did. you know, and I just took advantage of the situation. I didn't even think twice about it. And that's where you guys need to get to. And you will once you get the basics down. I mean, a lot of you guys already do. I'm talking for the newer traders. So let me see where I left off. After a few months and a lot of capital spent, the woman began to listen a bit more to what I was saying. After I began to take my profits to great heights, I wanted to share with her some of the principles that have brought me my success. Some traders listened, some didn't. Some even went so far as to dismiss me and my ideas. But as a trader, I didn't care. My account profits spoke for themselves. I didn't have anything to prove to anyone who doesn't care to accept what I say. And by the way, I feel the same exact way. I don't need to fight with people to make them see their point. And you guys know that about me, man. You're either in, you're out, one or the other. And that's what makes me genuine, as far as I'm concerned. I don't want people here wasting my time, wasting your time, just for money. You know, that's not what I'm about. I'm about to help teaching you guys how to trade. Woman's intelligence helped her bring her closer to her trading reality. She and I would trade together almost every day from this point on. She told me of her trades and listened to my opinions of them. I wasn't so much offer her trading strategy as a deeper look into why the stocks were moving the way they did. I didn't realize it at the time, but this was when I began to really refine my principles of trading. I began to apply some structure, what it was that was working for me. Previously, these principles were simply ideas that were distributed in an illogical manner throughout my head. Now they began to take shape. So while she was learning from me, I was progressing as well. It worked for both of us. Even more important, we often talked about the state of mind of a trader, and I try to put into words everything I learned about trading psychology. Her trading account stopped taking wild rides up and down, and instead her account grew steadily and slowly. She put her own spin on my method, and it worked for her. And I have seen this many times. The most successful students are those who find their own slant on the approach that they are being taught. They apply their personality to the system. They study and produce their own version of the system. That's their edge and their comfort zone for them. Okay, and I totally agree. And, I'm going to bring up Luigi again. He blew my mind probably within the first 2 weeks he was in the room. Took a year, studied. I think it was about a year. And he came back. This guy's like, yeah, I'll be back after, going around the world or wherever. I'm like, yeah, sure, you'll be back. No problem. And the guy calls me back, man. Like, hey, it's Luigi. Remember me? I'm like, yeah, baby, how you doing? And he's like, I'm ready to go. And I remember, and I hope Luigi don't mind me sharing this with you, I'm getting emails from him every day. He's like, Pete, is this for real? They're just like beginner's luck. Like, I'm like 14 days in a row, and I'm green. He goes, is this normal? I'm like, no, you just started, man. It's not normal, but it's happening. So from that point on, I got a couple more emails, like, no, this has to be beginner's luck. I'm like, Luigi, you're freaking nailing it, man. You're killing it. So he has the perfect temperament and the perfect personality to take my system and to blow it up, because he had the balls, he had the confidence. I mean, you got to be a little okay with risk when you jump out of airplanes. Okay, so yeah, maybe it's a little crazy sometimes, but you got to be. You got to take the chances when the odds are in your favor, man. You got to bounce. You got to snipe when the odds are in your favor. When the odds are in your favor on the A+ setup, you got to go large. And new traders will catch on, okay? I don't want you going large yet, okay? You have to. But this is just an example. Luigi took my system and just went huge with it with size. He tweaked a couple indicators, and boom. Freaking millionaire. Okay? I'm like blown away, brother. Like it feels I can't explain how good that freaking feels, man. And when we get the bank statements and everything to prove, you guys will see it's no bullshit. No bullshit. So I never thought that well, I shouldn't say that. I know my system works. I know I make good money. I never thought I would train a trader to make $1 million. And it's just a hell of a feeling, man. I can't say it enough. Can't say it enough. So, that's it. Anyway, it is a losing trade that carries the lesson. Hold on a second. Where the hell did I leave off? So I'm thinking about that $1 million, man. It threw me off a little bit. Okay. Eventually, we began talking openly about other traders. From these small trade reviews, again, trade reviews, it's such a critical aspect to this business. I began to see interesting parallels between me and them. They were all going through the same stages of the learning curve that I have just gone through. They've asked the same questions and experienced the same situations. I saw many of these traders taking the same journey I had taken. And again, that's what I see right now in this room. It's like most of you guys, I know where you're at. Because I have been there at one point or another. And now we have Chicago. I got, Cheerios. They're helping out the new guys. Because they've been where you guys are. And it's awesome. It's awesome. I call it the iconic circle for a reason, man. It's like we all try to take care of each other. I'm just looking for the next chapter. All right. What is the difference between my beginnings when I traded with no effort and where I am now, trading with minimal effort? I traded with no effort in the beginning because I did not feel fear. There was nothing to tell me that there was something to be afraid of. You learned a lot, a few of my horror stories, and certainly instilled fear in me. I learned risk and management principles, and I geared my inner self to trading. Now I have nothing to fear again. I don't believe the market can take money from me and take more money from me than I'm willing to give it. It's interesting how a beginner and an experienced trader can have the same belief, yet a different understanding of the market. That's so true. Biggest difference at the beginning stage was a lack of responsibility. The beginner's belief that trading is based on the market making and taking their money. Experienced traders know that it is they who are accountable for trading and the money they risk and make on each individual trade. Beginners will never become professionals without being accountable for their own action. Trading has nothing to do with what the market does to you. Another aspect of this belief adjustment relates to my Russian friend. She tried to learn a certain system from a trading service. Systems are not a one-size-fits-all entity. And if you read the playbook, you're going to understand what that means. There are so many different types of traders. You need to figure out what type of trader you are. There are numerous systems and numerous books out there about systems, and I'm sure there are many more to come. If I can just find the right system, trading will be a piece of cake. We know this to be false, since no system provides consistent winners with individual to individual. If a system existed that provided winners to all who used it, there would be far more traders making a very good living. But the fact is that 90% of traders lose money. Within a group of traders applying the same system, one trader makes more money than another, and some don't make money at all. The system is the same, so why are the profits different? Trading, again, is about us, and it's just a reflection of who we are at any given moment. Let me illustrate. You're in a stock, and it makes a couple ticks in your favor. Are you confident and calm? If you are, then you'll let it run. allowing the profit to develop. Are you a coward or do you feel unsure? If either is true, then you will take your profits prematurely. If your position is moving against you, are you a cold-blooded trader willing to accept the risk even before you put on the trade? Or do you feel like you just can't accept a monetary loss? If this is the case, then you are going to take your stop loss in the first case, and you will be subjected to a horrible emotional spiral in the second. We see simple market movement every day. The market moves up and down as aggregate shifts of demand and supply lean to one side or another. This happens at all price levels. The basis for movement is what we as traders try to define and profit from. Some see it in tape reading platform, some by technical analysis, some don't use anything. They just make it up as they go along. The last kind are my favorite kind of traders. They try to buy and sell a stock based solely on an opinion, and then try to hide behind the word intuition. I believe in intuition a great deal, but not when it's used to mask a lack of skill in stock trading. When I first brought up a chart of a stock, I saw a hill. I didn't see support and resistance. I didn't see capitulation. I didn't see euphoric events. I didn't see accumulations. I saw a hill. Why? Because there was nothing from previous experience to tell me what that hill meant, what moves within that hill were made up of. Okay? I think that's very important. Those of you who think the market provides profit and loss are mistaken. You and the choices you make decide this. If you accept the notion that the market dictates your profit and loss to any degree outside your parameters, you lose control of your trading. The market is neutral. It will go up and it will go down regardless of your position. It's you who engages and disengages making a profit or loss. The market doesn't know who you are, nor does it care. It goes up, making emotional longs happy and emotional shorts unhappy, and vice versa with the downward moves. Emotional trading is a killer of traders. The idea is that you, at this very moment, have some feeling within you about yourself when you're trading. Either you made money this morning and are eager to trade again because you feel confident, or you didn't make money this morning and you're feeling frustrated, ready to give up today. Or you might have made a profit and are willing to rest this afternoon, or you lost money and are ready for revenge trading this afternoon, as if the market owes you something. The market owes us nothing. Nothing. And for those who don't know about revenge trading, it will wipe you out in a heartbeat. Many people wonder, what if the market does what it does, and how will I still have control? The market moves to make me money or lose money. Well, we still have to hit the exit button, right? How many times early in our careers do we have a great profit only to turn into a loss? God, guys, that's like my pet peeve, man. I can't stand that. You know, when I say, take some here or cover your position, do it. Or when I say, move your stop down, do it. Don't let a winner turn into a loser. The point is that we are still the ones who make the decisions for entry and exit, and that's what we are in control of, our decisions. The market doesn't care about us. If you believe the market is trying to hurt you, you're misguided. The market isn't something to be at war with. It's something to move with. It's perfect, man. I love that. Something to move with. When you do, you regain control. When you regain control, what is there to fear? If there is nothing to fear, then you can make quick decisions for both entry and exits. Even if you don't profit, if you trade unemotionally, where each uptick or downtick is neither euphoria or pain, then you trade successfully. The idea is not to get rid of all your emotions. I don't even think it's even possible. The idea is to distance your trading decisions from your emotions. I love that. Understand that most traders experience the same set of emotions, and most of them lose. Doesn't this tell you that you need to learn to stop your emotions from governing your trades? Even more than that, you can use your emotions as a mirror to reveal what the majority thinks and feels, thus effectively allowing you to exploit the fear and greed of others. And that's basically what we do. And again, in order to be able to do it, you have to be emotionally detached. I spoke to a trader the other day, about separating his trading from his personal life and everything else that's going on. I told him, flick the switch. That's what I try to do, especially, this past couple months. It's been hell for me, no doubt. But you know what? I come in and I'm back flicking a switch. I may not be on 100% every day, but I'm always flicking that switch. And when I say flicking that switch, I'm like, I visualize a light switch. I'm turning on and I'm turning off. When I walk into my office, I'm flicking that damn switch to off, okay, as my personal life, and I'm turning my trading switch on. And I visualize myself doing that, and it sets my mind straight. One of the worst problems I had in the earlier stages of my career was listening to the opinions of others about my position. Couldn't be more true. For example, when I went long a stock and then heard someone mention that the market should sell now, I became anxious and eager to get out of my position. If the market cannot hurt us, then other traders' opinions of the stock movement can't either. We enter a trade based on our own experience and perception. We don't enter a stock and then immediately exit because someone suggests it's a bad idea. This is like cheating off the paper of another student, changing your answers from the right one to the wrong one because you think the other student knows more than you. I guarantee you guys, if you study over and over and over again, if you study, okay, there's not going to be anyone that knows more than you about when to exit and when to enter a friggin' stock. And it's something that you can take with you forever and teach your kids, and hopefully that will be part of your plan. If we make a choice in entering a trade, knowing that the market cannot hurt us outside of our predefined risk, then we shouldn't let outside opinions change our minds so fast. All about managing your predefined risks. The biggest problem I see with traders' applications of their system is that the systems tend to create the illusion of certainty and predictability. Systems do not tell the future. They simply provide us with signals for entry and exits. Systems offer a probability of a success, not a certainty. Once all the traders see an obvious pattern, they cannot be a profitable outcome. Let me read that again. It didn't make sense. Once all the traders see an obvious pattern, there cannot be a profitable outcome. Okay? The majority can't win in the market over time. The market can't exist this way. When traders' beliefs aren't close to the market reality, they will continue to allow us to feed off the misguided notions. Fortunately, these beliefs will never change because the market never changes. The market in general, I totally agree with that. The market is the market, and we are in control. But market, from a trading standpoint, does change. One of the most common beliefs is that the more we learn about a particular stock or company, the better we can read the price movement. Many times throughout the early learning stage of my trading, I fell prey to the notion that I had to know what the market was going to do or what an individual stock was going to do. For example, the market maker, Punk, it's not even around anymore, was selling an amazing number of shares at $20. What did it mean? What happens next? NDX, NASDAQ, is under 1900. What does it do next? Eventually my answer came to me. I don't know. You can't possibly know. Nobody knows. And you know what? I can trade successfully without knowing. Love that sentence. That's why I folded down this whole freaking paragraph. And what that means to me is, when someone say, hey, you think the stock's going to go from 10 to 12 bucks? I don't know. I don't know. I don't really know where stock is going to head. I can say, hey, you know what? It might be a good entry for long. This is where my first target would be. This is where my second target would be. But very rarely, when someone asks me, hey, the stock's at $8, you think it's going to go to 12? I don't know. Seriously. I can give you my opinion, but I don't know. There's so many different parameters. We got Fibonacci's that play a huge role, which I don't use anymore. I used to have so many indicators on my charts, you probably couldn't even see the price action. So I learned what's important and what's not important. And the candlesticks, if you haven't watched that video in a while, watch it. Because I think I said this like 5 months ago and give you guys a test on the candlesticks, and I haven't done it, but I think I'm going to. And I know the majority of you are going to pass because I get emails every time someone views a webinar. I get notified. And I love getting them because I know you guys are studying. That's the guys I want to keep around. Okay. I'm just seeing if this is going to be worth reading. Yeah, I'm going to read it anyway. As I talk with other traders throughout their trading process, I am often asked, I need to know, otherwise how can I trade? This is the major question traders have to answer. The answers can be found in the general approach to the market and in the understanding of its mechanics. Let's take a simple situation and determine whether it's possible to know all the factors that will impact future action. If it is, will this knowledge really help us to foresee what the market will do? Let's go back to the market maker example, Punk. It's selling a healthy number of shares at 20 bucks. The buyers hit them with continuous orders, and the orders get filled. Yet Punk is still there. The trader thinks, okay, how do I figure out how much is for sale because I can't trade not knowing it? Is it really possible to know how many shares Punk has to dump? Well, now it is, but Punk says it's virtually impossible. Let's assume he has an order from a big client and sells for the client. Sometimes even the market maker does not know the size of the entire order. Many times a client will not give the order to the same market maker, and that is exactly right. The client will split the order up to see who can get the best price and possibly route the remaining shares to the better of the market makers. Or the client might be trying to avoid letting the word out about a huge position change. There are a whole slew of things the client can do with an order. For argument's sake, let's assume that in some mysterious way the trader actually has information about what the client is doing. Now the trader knows for sure that Punk has 3 million shares to dump. Does this knowledge help the trader to see what happens next? No, because the trader cannot know how many shares buyers are willing to buy. If they want 10 million shares, the stock will most likely go up after Punk is done. If they want 500,000 shares, the price will most likely drop when the buyers are done. Let's make the next step in our unrealistic assumptions and pretend that our trader knows that a buyer wants 5 million shares. This still won't help the trader because the market is not static. It's changing all the time. When Punk is done, how can we know the other market makers won't move to the same price with their liquidity? Because they just got a call from their client. Or how can we know that buyers won't change their mind after they bought 2 million shares and decide to wait out a bit to get shares at a lower price, or maybe limit their exposure for now? Now let's pretend that we are conspiracy theory idiots and that we really think everything in the market can be known or figured out. We know everything. I already discussed. It still won't help. As the stock prices move, the balance of power changes, and new forces become interested in taking or liquidating positions. I know that people in their right minds would never suggest that anyone could possibly know all the current intentions of all market participants. And I also know how the intentions will change as prices change. As you can see, the very nature of the market is uncertainty. There is no such thing as no. Okay, nobody knows. It's probabilities. The market works, son of a bitch. The market works with probabilities, not certainties. This is what makes trading so challenging. And it is what makes trading different from many other careers. Engineers calculate and apply learned methods and know how a construction is going to act under certain circumstances. They don't have to deal with wondering whether a bridge will hold, if a certain amount of pressure is applied. They had better know it will hold. Our entire system of education is built on this approach. We gather information, analyze it, make conclusions based on facts, make a decision based on knowledge, and finally act on this decision, getting the result we determined in advance. And how different is what we do to that statement? What happens to people who try to trade using this kind of approach? Naturally, they attempt to gather as much information about the markets as possible. Then the information is analyzed. The traders now feel armed. They act on this information according to the analysis. Then they observe that despite their preparation, results are random. Sometimes the market acts as they thought it would, and sometimes it doesn't. Naturally, traders next decide that their information is not enough, or that their method of analysis is not perfect. They delve further, applying new system and new indicators, thereby making their analysis more and more complicated. All this activity convinces the traders that they are on the verge of finally figuring it all out, looking for that missing indicator. We all, I'm fairly sure, went through this vicious cycle in which each new piece of information seemed to be the missing piece of the puzzle. If a trader takes this journey, frustration is unavoidable. What happens here is that traders are trying to apply a method that has nothing to do with the way the market works. The methodology of collecting, analyzing, concluding works in the environment of certainties, and the market is not such an environment. Our next question actually is, how am I supposed to trade with confidence if I don't know what happens next? Okay, the next is making probabilities work for you, and then taking stock of it all. 5 minutes, bud. Almost done. But what I want to do, I want to skip ahead and end this for now, and then I will continue it. Well, see, it says, so much good stuff here. It says, do not overtrade. Buy low, sell high. Do not trade liquid stocks. I mean, there's so many good stuff that I really want to get into. Finding the elusive edge. A trader's intuition. The real art of trading. Let me just find a good way to end this for tonight. The rules for the mindset of a mature trader. Man, there's just so much good stuff I want to get to. So anyway, what I'm going to do, I am going to just go to the general state of mind. Okay? First one, responsibility for your own trading. No one has control over me. I am controlling myself. Any changes in my account are caused by me. I am looking into my actions to find the reason for any changes that occur. I have the power to make positive changes in my account. No one can hurt me, since I am protected by my rules and my discipline. The market is not a hostile environment. It's just a sea of opportunities. I'm giving myself money or taking it from myself. I am not hiding in the comfort of blaming someone else. I want the result, profit or loss, to come from my choices. Opinionless state of mind. The market has no firm link between reason and outcome. I don't have to figure out the future. I don't need the weight of opinion on my shoulders. I am free to react to whatever happens by relying on my reading of the stock action. I keep a flexible state of mind. Nothing prevents me from changing my tactics if the market doesn't act as I suspected. Confidence. I don't know what the market will do next. I don't have to know. I know how I will react to anything the market does. I'm confident in my ability to react correctly. I have a strategy that works and the discipline to carry it out. I am independent-minded. I don't trade to please others. I am self-reliant. I question any trade I take, but I don't question my ability to make the right decisions. I trade effortlessly and automatically. I manage risk and assume losses. I trust myself. Living in reality. I do not convince myself that I am right. I just watch stock movement and make my conclusion. When market behavior changes, so does my strategy. Market movement is the ultimate truth. I am not trying to outsmart or outguess it. I live in the here and now, and my mind is open to the possibilities. Emotionless. I am objective and calm. I am a detached observer. I don't get angry about the stocks not doing what I expected. I know they do what they do, and the market is what it is. I don't get frustrated with stop losses. They're part of the game. I don't get overexcited with winning trades. They're just one more confirmation of my correct approach. I feel good about my trading and about myself. My performance as a trader does not reflect on my self-worth. Very important. Very important. So that is all in the general state of mind. The first chapter of a trader's journey. Not the first chapter, the first outline of 8 different rules of a trader's journey, which you guys should probably get a copy of this. Again, responsibility for your own trading, opinionless state of mind, confidence, living in reality, and emotionless. That's it. So there's more. Again, like I said, I want to cover. I'm going to jump ahead to number 6 and just read these 3, and then I'm going to call this one a night. And then I'll pick up where I left off, because there's just like the meat that I really wanted to get into, tape reading and traders' actions. I really want to cover this, but I know after an hour you generally lose interest. So this is a proven fact. I'm not saying you guys, but it's a proven fact. After an hour, people tend to stop listening. So stop loss. Stopping out prevents losses. It's not losing, it's preventing a loss. I am not trying to control the market. I admit to its independence. I am willing to act in tune with it. If I find myself in the wrong place at the wrong time, it is in my power to get out. I have the responsibility to keep my trading account in good shape, and stop loss is my way to achieve this. There's nothing wrong with being stopped out. A stop does not make me a loser. It makes me a winner, serving as a line of defense for my account. This is my way to control events. This is my salvation. I want to be in control and be happy. A stop is not a loss. A stop prevents a loss from growing. The market is in endless motion. No trade is so significant that it's worth holding onto if it doesn't work. The next opportunity comes right away. I will switch easily from the trade that doesn't work to another trade that will. I will enter any trade accepting in advance that it can stop me out. If the trade doesn't work out, it won't come as a surprise to me. My trading strategy has the inevitability of losses built into it. But no single loss can get out of hand. You go on the fear of trading and hesitating to pull a trigger, which if you hesitate, you're going to miss the frickin' trade. Trading is a game of probabilities. I don't have to be right every time. I just have to follow my rules. I know my system works. Every trade is either a profit or a stop. Any given trade is not of significance. The results over a certain time period are what matter. Trading within my proven system puts the odds on my side. I have to play to allow opportunities to materialize. I know I can trade by my rules. All I do is react to signals. A signal to enter and a signal to cut. They are generated by my system. They take me in and take me out with no hesitation. I can observe the market and emotionally detach from it. Sorry about that. Any stock movement is simply numbers that change following certain patterns. I know how to read those patterns. I am totally focused on what the market is telling me. I can hear it and I can react to it. Letting winners run, number 7. I don't have to be right all the time. I don't have to take a profit as soon as my position shows one. I have to sell when my system generates a selling signal, not when I have a profit. My goal is to play within a set of rules, not to make money. Things once set in motion tend to remain in motion. I want to ride them while they move. I just trail my stop until the stock proves that it has reversed or until a sell signal is generated. My system is profit orientated. I am going to let it generate profits. And I'm going to end this on overtrading. I have only one reason to put on a trade. The reason is a valid setup in terms of my system. There are no external influences that can make me trade. Boredom is not a reason to trade. Being down for the day is not a reason to trade. The market does not care about me being up or down. It generates profitable opportunities regardless of what I want. I wait for the market to create a situation that I can recognize. That's where you go to your playbook. Okay? I am not eager to find the trade. I will know when it comes along. I don't have to be in the markets all the time. I sit and I wait for the right opportunity. My money works when it's in a trade that exploits a profitable opportunity. My money works when it's sitting on the sidelines, ready for the right moment. Yes, you can use these mantras or to design your own for your own specific problems. Their repetition really helps instill good habits and tune up your mindset. In the early chapters, we discussed a trading journal. You guys already know about that as a way to pinpoint specific mindset problems. A combination of such diagnoses with mantras creates a powerful way of troubleshooting your trading. So I'm going to leave it at that. Hopefully you guys got some good stuff out of that. But there's just so much more in this book. I'm actually going to recommend, now that I revisit it, you guys go out and pick one up. Because there's just so much good stuff in this book. I'm looking here about trailing stops and confidence levels. More chart breakdowns. They got different setups that you can add to your playbook. The open low break setup, the fading breakout, the fake breakouts. There's just so much good stuff in here. So, again, book is Techniques of Tape Reading. And it pretty much tells you what you guys need to be doing. And I am just giving you the system. So, again, hope you guys find that useful. Congrats to Luigi. Lucky millionaire. Unbelievable. And it can be done. It can be done. So, just let you guys know, when, I decide, or when Luigi and I decide to make that public, the room's not going to change. Okay? It's as simple as that. The room's still going to be small. And that's the way I want it. So I never wanted a big room. Don't care to have a big room. In fact, I kind of like it small because, now that he's at his point, I realized, over the year, which is totally fine with me. It was my decision, that my trading has definitely, taken, let's say, I'm not generating as many profits as I did before I had the room. So another reason why I'm keeping the room small, and that's what it's always going to be. So it would be nice, to get Luigi recognized and to get Iconic recognized for the accomplishment, but that will happen in time. But I am not changing the room, and I want you guys to understand that. So I'm even thinking about just keeping it the way it is now and just let it roll, because I need to get myself back to my big time trading, because now I have a student outdoing the teacher, and as a competitive person, I just can't allow that. Anyway, guys, I really hope you enjoyed it. I hope you guys got something out of this hour and 11 minutes. I got some good reminders reading that stuff to you. And I'll see you pre-market, and hopefully we'll have another kick-ass open. But most importantly, if you're trading the open, don't analyze it. Just listen to me and take the trade. You can't analyze the open, okay? You just look for support and resistance, and you go with the flow. So on that, guys, have a great night, and thanks for listening.